the company as a whole saw the stock sell off in a big way. Now, over the last 30 days, it had run up to its all-time highs, in fact, heading right into earnings. Now, I've been, tracking across tech earnings over the last few months, and we're starting to see this trend of big tech getting a lot of momentum, buying on rumors, selling on news. Doesn't matter if you made it, you missed it, you were close, you blew it out. People are exiting. I saw it with NVIDIA. We've seen it with Oracle. We're seeing it with others. Making your number is not enough anymore to drive the stock up. But then again, you don't always have to make it to get that run either. So,
oh my gosh, my favorite headlines have been recently, Daniel, where it's like, company X exceeds expectations, stock goes down. It's crazy.
Well, that's what happened yesterday. I mean, the company beat just slightly on revenue and came up ahead on earnings. And, the guidance was consistent. It wasn't holy cow, but they increased their dividend 33%. They upped, I think they approved a $40 billion buyback for stock in the next year. It was some massive number. I'll have to look back to share. It was either 20 or 40, which are both big, but just to be clear, I don't have that off the top of my head, but it was a huge buyback number. And of course, those are sort of artificial or synthetic ways to create resiliency in a stock price. But the real news for the company was it's having some success. Now, it's having some success, but it's kind of getting lost a little bit inside of a bigger set of numbers. So Oracle has sort of its true legacy business, its database business, its on-prem licensing business, services business. And that part of the business is all pretty flat, anywhere from, a small loss to a growth of, just a few percent. But it also makes up a huge chunk of the revenue. But the company's made this big pivot over to cloud. It's cloud in two buckets too. I'd say cloud in terms of infrastructure and platforms, and then cloud in terms of software as a service, which is its NetSuite and Fusion ERP solutions. Now, its OCI business, the Gen 1 was rough. The Gen 2 is much better. This autonomous database is showing a lot of strength and resiliency. It's Cloud at Customer, which is its outposts. For those of you familiar with AWS, it's their approach to the hybrid. Those are seeing 155 and 200% growth respectively. But again, we don't have any idea what that is of, because that isn't being disclosed right now. So you're hearing these huge growth trajectories in areas that are key to the company, but you're not getting really great clarity as to where that's coming from. And on the other hand, you're getting SaaS growth. So, last week we talked about Salesforce. The company's growing in the low 20s%. Platforms a little faster, legacy sales and service a little bit slower. Well, their Fusion ERP and their NetSuite, which is what competes in the SaaS space with the likes of Salesforce, and it's a comprehensive suite, the CX suite, all this. They're seeing growths in the 21% to 33% range. I think this particular quarter was 24% for NetSuite ERP, 30% for Fusion ERP in the cloud, SaaS software. Company had a pretty long list of wins. In fact, go back and listen to the earnings call. You'll get our introduction to this whole segment when I do that. But a ton of wins for the company. Able to announce some real customer wins, everything in ERP, HCM, Gen 2 Cloud, Exadata, Cloud at Customer. Very specific. Problem is 5% growth, 3% overall, 5% in the cloud segment. The company needs to up the transparency, Pat, is my big takeaway from this. It's talking big growth, but people want to know, what is that big growth from? Temporarily, it's being propped up, 33% bigger div, offering a significant stock buyback, consistent but slow growth, but that ends up getting them compared to monolithic older tech companies. It doesn't get them compared to the hyper growth SaaS and cloud companies, which is where Larry and the team at Oracle want to play. However, they end up getting bucketed with the others because single digit growth gets you locked into that bucket. But overall, a pretty good quarter, encouraging. Buried in those numbers, Pat, is a better story.